Hey guys, how's it going? My name is Hippo, and today I want to talk to you about a company that I think is going to be one of the most promising investments for the future, okay, as a long-term stock. This company is Disney. I'm going to go over why I think Disney is being reborn as a company. I'm going to go over some of their financials, and of course, I'm going to tell you what I'm going to be doing with this information. Okay, I've added some timestamps in the video, so you can click on them if you want to jump to a specific section. So Disney. This is a huge company. Historically, it has had 4 business segments. Those were media networks, the theme parks, direct to consumer, as well as the studio itself. I'm not talking about any of those today, okay? I'm talking about a new one, a new business segment that is completely changing everything and why I'm so bullish on the company. And this is their entertainment, distribution, and media segment, okay? This is essentially Disney Plus. It's their streaming service. Understand that Disney has an amazing amount of content, okay? This is their moat. This is their biggest advantage to their competitors, is that it has a vast amount of library content that they can use and leverage at any time, and they do it very well. And because of the fact that it's so easy for them to come up with content, they can invest a lot more than their competitors on production. Okay, and this is something that we're seeing over and over again with all of their franchises. So they own a lot, okay? They've acquired a lot. Marvel, Star Wars with LucasArts, Pixar, 21st Century Fox, with National Geographic. I mean, there's so many, but I'm going to talk about Marvel, okay? I'm a Marvel fan. I hope you are too. Marvel itself is the highest grossing franchise of all time. It grossed something like $22 billion. For all you Marvel nerds out there, you'll know that there were 3 phases of the Marvel Cinematic Universe. Phase 1 netted almost $4 billion. One of them actually hit the $1 billion threshold. In phase 2, 2 of those actually hit the $1 billion mark. Phase 3, we have 11 movies netting $13 billion, and 3 of those movies actually hit the $1 billion mark. So we're seeing a growth here with not just quantity, but also in quality. That revenue number is going up. They keep on executing in terms of production. And so here, what's interesting to know is that actually we are now in the phase 4 of the MCU, which is starting this year up until 2023. And phase 4 of the MCU is very interesting. So have a look at this. This is the films. We have 11 movies here. Black Widow with Scarlett Johansson, Spider-Man, Tom Holland, Doctor Strange, Benedict Cumberbatch, Thor, Chris Hemsworth, etc. The production is going to be the same, if not better. Now, what's interesting is the television series. This here is the real moneymaker for Disney Plus. We have 13 of them, 13 series where there were previously none. Okay, this is a huge growth. And this is something that they're doing with the same level of cast. So we're seeing the same with Tom Hiddleston with Loki, Brie Larson with Mrs. Marvel, Jeremy Renner with Hawkeye, WandaVision with Elizabeth Olsen, etc. And the same level of production for the series. So we're going to have movie level production for per episode. This is pretty impressive, okay? Everybody loved Black Panther. It was more than $1 billion in revenue at the box office. It's the 9th highest grossing film of all time. And so Disney, they're applying that formula of making a series out of it. They signed the producer for a sequel and for a multi-year Wakanda series. And this is a formula that Disney is applying and is working very well. They're doing it with Star Wars. Okay, this is the 2nd highest grossing franchise of all time. So they have the 1st and the 2nd. And, you know, they've created the Mandalorian series last year. This was a success. Everybody loved it. I loved it. And it got 7 primetime Emmy Awards for it. They made 3 spin-offs. 3 spin-offs of Star Wars already. This is just in a year. This is going to be huge, okay? So what does this translate to in terms of subscriptions? We want to know, is this actually working? And to answer that, yes, it is working. So Disney, I'm going to share that with you, has topped 100 million subscribers just 16 months after the launch. Okay, if this doesn't ring any bells for you, this will. Netflix hit 100 million subscribers over a decade. Okay, Disney did it in a year and a half. Netflix just hit 200 million subscribers this year. Disney is forecasting to hit it by 2024. So that's in 3 years. Crazy growth. So clearly it's working. We want to look at Netflix and Disney. We'll look at the relationship there as well, because Netflix is essentially at the mercy of Disney's content. And this is something we've seen with Daredevil, Jessica Jones, Luke Cage, Iron Fist. These series were successes on Netflix. They were all really well rated. Look at this. 99%, 81, 97, 94, 82, 90, 85. Guys, this is really good coming from Rotten Tomatoes. I mean, none of these are rotten. It's very good. This is a formula that Netflix Netflix needs this content, and Disney Plus arriving on the scene is a threat to that, okay? Because the story is good, the business model is good, but how is it doing? And so looking at the subscriptions, we know that obviously now, this time last year, there were barely any, and now we're more than 100 million. But in terms of revenue, is this bringing us money? And yes, it is. You can see here that this is bringing us money. The 4 segments before, obviously they all took a hit. And then out of nowhere here, you have Disney Media and Entertainment Distribution, accounting for 75% of total earnings. That's $16 billion. Out of that, 12 billion is from Disney Plus. This is in the very first instance of a fresh new business segment. That's impressive. It is bringing money, and you'll see here the eliminations are gone. So it's not only keeping Disney afloat, but it's actually making it thrive. And we can see this as well with the OPEX. They're actually not spending crazy amounts for this. They're spending a healthy amount. Okay, we see here, the chart is a very healthy chart for a company that's investing in the business. Yeah, so this is very good. And in terms of cash, we want to know in a better position than before. And yes, this time last year, they had almost 7 billion. Today, they have over $17 billion. So they have $10 billion more in cash thanks to Disney Plus. Also thanks to some of the cost-cutting strategies during COVID, but especially due to Disney Plus. But how much of this cash is actually liquid, right? We want to know, can Disney meet all of its debt obligations? And for this, we have to look at its balance sheet. We need to know, in terms of assets to liabilities, the ratio. So we have 35 billion here, 26 billion here. That's a 1.34 current ratio. So we want that number to be above 1.2. This is a number that essentially tells us whether a company can repay its liabilities, so that's its debt obligations. Disney has a lot of long-term debt, and clearly with 1.34, it can. And this is a healthy balance sheet. The next thing I want to look at is the actual forecast of the price targets. I don't like price targets. I'm not a fan of it because there are interests that aren't really aligned there with banks and with the retail investor. But the consensus does speak volume. And so here you see that 22 analysts on Wall Street have all, on average, consider it a strong buy. 19 of them a buy, 3 of them a hold, 0 of them advising a sell. And all of the price targets are above 200, for example here. And these were all 3 months ago. So this was based on the last quarter. And so this week we have the quarterly earnings of Disney, and these numbers are going to go up. The price targets are going to go up, and I can't wait to see the earnings myself. Disney is a good spot financially, and it's poised for growth thanks to Disney Plus. And Disney is not just a pandemic play, because thanks to Disney Plus it was, but it is now also a recovery play, because once the economy recovers and there's a new normal in place, all of Disney's theme parks and previous business segments will be roaring back into action. So you're going to see very good growth up ahead. And you don't want to trade Disney. This is a long-term stock, right? This is a stock that's here, in 10 years from now, will be in a much better spot than they are today. And this is particularly because of Disney Plus. Warren Buffett actually bought it in 1966, 5% of Disney. He sold it a year later for $6 million. So from $4 million, he sold it for $6 million. And today that stake would be worth $11 billion. So this is not a stock you want to keep on the short term. You want to hold this for the long term. Of course, this is not financial advice. This is purely for entertainment purposes. You have to do your own due diligence. Okay, this is mine. You have to, inform yourself. Hopefully this helps. But it's something that I currently own. Yeah, and that's what I'm doing with this information is I'm going to buy more. I own Disney stock and I want to buy more. My allocation right now is 8%, and I want it to increase to 14% this year. Okay. This is all I have for you today. So if you're still here, I want you to tell me in the comment section below, who is your favorite Marvel superhero and why? I'll see you in the next one, guys.